Taxes have gotten completely out of control in this country. In fact, millions of Americans are paying 30, 40, or even 50% or more on taxes every single year. That means that many people are working more than 6 months every single year without even being able to keep a single dime. Does that sound fair to you? Or is taxation starting to seem a lot more like theft in modern day America? I mean, between incredibly high taxes, inflation, tens of millions of Americans are struggling to stay afloat financially right now. And I know a lot of you are feeling it. Soaring prices for things like food, clothing, gas, housing, and more just make things extremely difficult in America right now. Taxes are so high in the United States that for many people, it's their single largest expense on a yearly basis. But what are taxes, and how did they get so high? To put it simply, taxes are when the government forces you to hand over a chunk of the money you earn under threat of imprisonment. It's that simple. Pay up or go to jail. Remember that bully in middle school who would threaten to beat up that classmate if they didn't hand over their lunch money? That is very similar to how taxation works here in America. Except with taxation, it is the government who is the bully, and it's not lunch money it's after. It is taking the fruits of thousands of hours of your labor, money that you could spend otherwise on taking care of your family. So, are taxes necessary? Let me ask you that question. I know what you might be thinking.
Karlton, taxes are just an inevitable part of living in America. We all have to pay them for our government and our society to function as a whole.
Well, here's a little fact that you might not know. Income taxes did not always exist in America. In fact, for roughly, the first 135 years of Americans' history, we didn't have any federal income taxes. There were a few exceptions, such as during, the Civil War, but for the vast majority of Americans, the first 14 decades of their existence, there was no tax on income. You kept what you earned. So how did the government get funding? Well, during this time, the government generated enough revenue to fund its entire operations through things like tariffs and excise taxes on products like alcohol and tobacco. So, anyone who tells you that income taxes are necessary to make America run simply does not understand their history. This country has literally existed for more years without federal income taxes than it has with federal income taxes. The reason why income taxes did not exist for almost a century and a half is because the founding fathers intentionally deprived the federal government of the ability to tax income. Why did they do this? Perhaps it was because they considered income taxes to be a form of unfair robbery by the government on its citizens, which is exactly what they fought the Revolutionary War to avoid. Before the American Revolution, the founding fathers all felt the effects of high and unjust taxes when the colonies were still ruled by the British Crown. This unjust taxation directly led to the Revolutionary War and to the founding of America itself. But as time went on, Americans have gradually forgotten that our founding fathers did not want our income to be taxed. We have also forgotten that our past was income tax free. So I want to go over the origin of income taxes in America. You see, regarding income taxes, everything changed in 1913. During this year, the 16th Amendment was added to the United States Constitution. This gave the federal government the power to tax income. The original federal income tax applied almost exclusively to ultra-wealthy individuals who were in the top 1%, and they paid around 1% in income taxes. In other words, the way that income taxes got started in America was with tiny, barely noticeable income taxes that only applied to a tiny fraction of the population. Maybe the government started out with such a small tax because it was afraid that the population would reject income taxes in general. Perhaps it was even afraid that another Boston Tea Party or another revolution could occur. But this didn't occur. In 1913, the government got away with taxing income, and it has never stopped since. In fact, since that year, income tax rates have gone up substantially, and many more taxes were added soon after income taxes were added. The modern estate tax was established in 1916. The gross receipts tax was established in 1921. The gift tax was established in 1924, and the list goes on and on. Over the years, the government has added more and more ways to tax you and take money out of your pocket. Do you have a car? You have to pay excise taxes on it if you do every year. Do you buy products? You have to pay sales taxes on it if you make purchases. Do you own property? You have to pay property taxes. Did you sell any assets at higher prices than the ones that you bought them for? Then you're going to have to pay capital gains taxes. And the list goes on and on, guys. The taxes are never ending. The government even charges high earners a massive tax if they decide to renounce their United States citizenship, and it will tax your income if you remain a citizen and move to another country. The United States is one of the only countries in the world that does that. But you know what tax we're forgetting? The hidden tax, inflation. On top of all the many taxes that Americans have to pay, we also now have to contend with inflation. Inflation is when prices rise as a result of too much currency being printed, and the government constantly spends more money than it generates in tax revenue. This creates a deficit. This is similarly to overdrafting your bank account. But unlike ordinary citizens, the government has the ability to just simply print more money whenever it wants to. So, there is really no limit to how much it can spend. While this might be good for government bureaucrats who love to spend money, it creates a lot of inflation which harms everyday Americans. Have you been trying to save for a house, for a wedding, for a new car? But you notice that the prices always tend to just keep going up and up. Or perhaps have you noticed that the groceries, the gasoline, and maybe the clothes that you're buying, they keep getting more and more expensive. This is because the government continues to expand our currency supply through its excessive money printing. This causes inflation, and inflation is not technically a tax. However, it acts like a tax because it's creating new dollars, and it results in the ones that you own being worth less. The government gets to spend more money when it prints it, but you don't. Therefore, your purchasing power decreases, which makes it feel like a tax. Through a long, slow, and gradual process, the government has become an inflation, debt, and tax generation machine. It was never intended by our founding fathers to be like this. They would probably be rolling over in their graves if they could see what has happened to our country. So, are federal income taxes theft? The answer to this question depends on who you ask. You see, Merriam-Webster defines theft as the felonious taking and removing of personal property with intent to deprive the rightful owner of it. According to this definition, before 1913, federal income taxes would have qualified as theft. According to current laws, it does not. But if you ask the founding fathers or millions of Americans who are currently struggling to keep up with their bills, many of them would almost certainly say that it is theft. Let me know if you think it is theft in the comments below. So what can we do? Regardless of whether you consider taxes to be theft or justifiable payments to the government, the fact remains that taxes are extremely high in this country. So what can we actually do to lower our taxes? The answer is tax strategy. Here on my YouTube channel, I teach tax strategy. When it is used correctly, tax strategy acts like a shield that defends against tax. And here are 3 ways that you can use tax strategy right now to reduce your tax bill substantially. Contribute to tax-advantaged retirement accounts. Retirement accounts like 401ks and IRAs have tremendous tax advantages. Traditional 401ks and IRAs allow you to make pre-tax contributions and let your account grow tax deferred. You are only taxed upon your withdrawals. With Roth 401ks and IRAs, you can grow your accounts completely tax-free. You can make contributions to these accounts on an after-tax basis, and you are not taxed when you withdraw later on in life. Both of these retirement account types have great tax benefits that you can take advantage of. But let's talk about investing in real estate. Many of the best tax breaks in the entire tax code are reserved for real estate investors. And this means that becoming a real estate investor can actually increase your cash flow and reduce your taxes. Certain types of real estate investing provides more tax breaks than others. For example, if you invest in short-term real estate and if your rental period is 7 days or less per customer and you manage the property for 100 hours and more than any other person, you can use your real estate losses to offset your W-2 or your 1099 income. Real estate investors can also deduct many different costs, including the full value of their building structure through the depreciation deduction. Additionally, real estate investors can potentially defer capital gains taxes indefinitely by using the 1031 exchange strategy. But another strategy is also getting an HSA. With a health savings account, or HSA, you can choose to put money into a qualified medical expense account that can grow with the market, that can be used for medical expenses and provide you with a tax deduction on a pre-tax basis. Once the money is in the account, it can grow tax-free. Then, when you withdraw money from the account, you will not be taxed on it as long as it is spent on qualifying medical expenses. So these accounts can help you to reduce your taxable income while helping you grow tax-free money that you can spend on your own healthcare cost. Okay, so here you have it. We've made it to the end of this video. Those are the 3 things that you can do to start reducing your taxable income that just came off the top of my head. I honestly can leverage hundreds of strategies if I had you in front of me and we were on the phone call together, which is why I would encourage you to schedule a complimentary consultation with my team. Allow my team to walk you through the strategies that we utilize for high net worth individuals, the average taxpayer, and new real estate investors who want to get into short-term rentals to avoid their W-2 and 1099 income. I would encourage you to also join my exclusive Tax Strategy Accelerator community. This community is filled with powerful resources like tax courses, ebooks, my coaching call recordings, and much more. My team and I drop tax gems in there every single day, and we're answering questions in the community to keep you up to date with tax information that you're looking for. You can also network with other tax experts, tax savers, entrepreneurs, and investors inside of the community. So be sure to check that out as well. That's all I have for today's video. Thank you so much for watching, and I look forward to seeing you on the next video. Go ahead and like, comment, subscribe, and I'll see you soon.